Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey there, it's David Stendahl with tonight's Deep Dive. It is May 1st, 2019. Thought I would look at soybeans today, the ETF being SOYB. It emulates the soybean futures, but you can do it in an ETF or a stock format, if you will. So what do we have going on with soybeans? Kind of a mixed bag here, and so we're at a point where you really want to start paying attention to soybeans. Let's just go through the particulars. The trends are all pointing to the downside. No surprise there. We have a mixed technical rating that is underway right now, and we had a sub low that triggered. This is a power level indicator. It's a momentum oriented type indicator, and of all the momentum indicators, the elastic level, the wave level, and the power level, the power level is the longer term of the three. And so what it's basically telling us is that the market has gone through quite the extreme as of late, and there's a potential for a base to the market. So a sub meaning submarine. The market as a submarine has come down substantially, and it's probably time for it to pop back up, and that's what the sub or submarine actually stands for. So if we actually look at soybeans itself, I'll just show you the critical level that really needs to start playing with. Otherwise, it could be even worse. So here's the trend in soybeans, soybean futures to the downside. We've got a signal where if you come back through this support level right through here, it's a 50 meaning that it's very, very strong. That's a weighting. You can see that if you come all the way across, that with today's action, yesterday's action, we broke below that. Now I would anticipate that we're going to with that sub, that's what this little dot is way down here at the bottom, that sub indicator is telling us that the market wants to bounce up a little bit. Another indicator we have here is the elastic level, and you can see that the trend obviously lower all the way through, but with the elastic level, we had a low that was set a couple of days ago and a higher low that has been triggered today. That's a bullish divergence. The pop to the market and the indicator is suggesting that this trend to the downside is going to base here fairly soon. This is why it is that I wanted to talk about soybeans, because there's a potential that if we can get it to bounce back above this support level, I'll give you that number here. It is not 865 and 3/8. That's what this level is right now. This based on the July contract. We need that to bounce above that level for me to feel a little more secure. I'll say why, because if we take a look at a weekly chart, here's a weekly chart, and you can see this great support here based on weekly charts. And from this perspective, that's 876 and 3/8. That's what this is right here. So we're below that level. And if we don't find a way to get a closing back above either of these two support levels, whether it's on daily bars or on weekly bars, then we could be in for a substantial sell-off here. So we're at that critical point. Now the systems themselves are actually short. I'll just pull up a couple things here for you. Here are the systems. We got 3 short positions out there. Just on a per contract basis, we're up 1900. Now things can change here, that it can either ratchet to the downside, or we're going to get that basing and really try to get back above those support levels. So we'll see how things go. For right now, the systems are on the short side, and I think for good reason, quite honestly, that here is the depth gauge for soybeans, and the trend is most certainly pointed to the downside, this blue area. So the conditions, the current conditions, are still bearish, so no surprise that we can see that in the trends of the market, but there are early indications, the sub, that bullish divergence that I was talking about, those are early signs that the market really wants to put in some type of a base. I'll also point out on our deep dive patterns, soybeans had a surge low, that's what this represents, the 0 meaning today, and that surge low indicates to us that the market is looking for some profit taking on the short side. So the fact is that there's enough indications here that the market could get a bit of a bounce. The systems will slowly react to these conditions, but for right now, they're still looking on the short side. But there are things on the horizon that are telling us that obviously that there's room for a reason to think that the market actually might base a little bit. Here's the targets for the market. This being basically today's close right here. And the reason I'm pointing this out is that we're kind of in no man's land. If for some reason we continue to sell off, we've got quite a ways to go before we see any type of support. And this of all the supports, a count of 1 with a strength of 11, that is super weak. So I don't even consider this to be a really good target, but it gives you an idea that there is nothing holding this market up. And so we better get back above those thresholds that I pointed out on the dailies and the weeklies ASAP. Otherwise, this trend will continue to the downside. So we're really in no man's land right now. So it'll be interesting to see how things sort of play out here. So with that, just keep tabs on soybeans, watch the system, see if there's the opportunity for things to reverse to the long side. But they're going to wait to see a base, a bottom put in place before they're going to be convinced because of the strength of this trend. So short term, if you just want to have a flyer out there, you might want to look on the long side. But the systems themselves, they're going to play it safe. They're enjoying the trend to the downside, and they're going to have to be shown that a base is in place before they're going to react. So I'm giving you sort of a heads up as to the opportunity for the market to reverse course a little bit to the upside. But as I mentioned, they really do need to follow or I guess get above those support levels that I referred to. Otherwise, this trend's going to continue to the downside. So with that, thanks for watching, and we'll look at some more markets soon enough. Bye-bye.